You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Welcome back to Mining Stock Education. I am your host, Bill Powers, and in today's show, I am going to be talking about the Arcana Silver investment thesis, how it's become very disappointing in light of recent occurrences. This is a stock that we featured on this show for about 2 years. I was an investor right at the beginning of when we began to feature it, and it's gone up a lot and came down even below where it was when we initially started featuring it. So it's been a big disappointment for many of you. I've seen your emails, I've got your messages, and I want to talk through 4 things. Why I invested in Arcana to begin with. 2, the biggest objections that I received from people I talked to about the investment thesis when I first invested, as well as feedback through YouTube comments and messages, some of your thoughts that you shared it with me when we originally began to feature the company. And 3, why I just sold out of my position at about 18 cents Canadian. I fully exited, sold my last 120,000 shares at about 19 cents Canadian last week. And 4, what would I do differently, or what did I learn? With any investment thesis and any speculation you take in the junior mining sector, you want to own it. The only thing you can control is yourself. And so when something doesn't go as planned, you have to learn from it, because that's what you take into the future to hopefully make better decisions. But in saying that, this wasn't a loss for me. I invested at 22 cents Canadian with a full warrant at 37.5 cents. And when we originally focused on this company in early 2020, it was trading low 20 cent, mid 20 cent range Canadian. And then it went up to $1.25-ish, I remember. So at the peak there, I was sitting on a 10-fold gain. So it was basically a 10-bagger for me at that point, because you consider the in-the-money portion of the warrants. You know, $1.25 minus a warrant you could exercise at 37.5 cents. That added up to about a 9-bagger, 9 or 10-bagger. And when I did the calculations here and preparing for this monologue, I ended up with about a 3-fold from my initial capital. So even though I sold my last chunk of shares below what I originally purchased them, my first batch I purchased at 22 cents and selling out at 18 cents, overall, I still made about 200% on this investment over the 2 years that I owned it. So it's not a loss, but it is a huge disappointment, because this one, if they were able to bring the Ouray silver mine, the Revenue Virginia silver mine in Ouray, Colorado, into production, grow it out, consolidate the district like they talked about, and then bring in their second permitted shafter mine into production, this was easily a multi-dollar stock. And then you throw in the expected silver bull market whenever that would occur. I know silver is not doing so good at the time of this recording, but I'm still very bullish over the next years for the silver price. If you add in a silver price to a growing multi-asset silver producer, easily could go into the multi-dollar range for the stock. And this would have been a stock I purchased at 22 cents with the 37.5 warrant. And so that's why we invest in these mining stocks. So going back to why would you invest in Arcana Silver, and why did I invest in Arcana Silver? I'll point out by saying that they had 2 permitted silver mines in Colorado and Texas in the United States. Primary silver, there's lead and there's zinc there also, but it's a primary silver mine. So you show me where you can find permitted silver mines, especially in the States, that are primarily silver. There's just not a lot of silver investments out there. So if you're a silver bull, you're limited to some select companies. And if you want a going into production story, you're very limited, because a lot of these companies, even when they lift up the upside, the permitting process takes absolutely forever. So with Arcana, the permitting risk was totally removed. They had permits at 2 projects. They had a stated pipeline, so there was growth prospects, and the valuation, the market cap when I invested was very low. It was like 30 million Canadian, or it might have even dipped down into the high $20 million range Canadian for the market cap. So considering what they had, that was a very compelling and low entry point from my perspective. They were a near-term producer, and there was a relatively low capex burden to overcome. And I was, as I stated, expecting silver to rise. So that's the gist of the investment thesis. And beyond that, I met for 2 years in a row with the Arcana management at the Beaver Creek Precious Metals Summit. So that's where when you go to these conferences, you may not buy the stock right away, but you get to get a feel for management over a couple years, meeting them, getting updates on the story before you pull the trigger. That's what happened in this case. Now, what were some of the biggest objections I faced when I told some of my friends and smart people in the sector that I was investing in Arcana, or when I had originally featured Arcana? And honestly, that first day when I put out the first interview with Kevin Drover, the CEO, a lot of very angry people and a lot of negative feedback came back. And it had to do with Arcana's past and their failure. They were a failed story. They did have a mine taken from them. They lost the assets, and they didn't fulfill in the last cycle what they told investors they would. And so those that lifted that up, you were 100% right. Arcana was a failure, and it would often be pointed out, well, Eric Sprott, this is one of the few silver companies that Eric Sprott would not invest in. And that's because he lost a lot of money, and it was bitter, losing a lot of money on the last Arcana story and getting the La Negra mine taken away from them, and just the mismanagement that occurred. And that kind of leads into the second objection, or point B for the first objection, which is it was Kevin Drover's fault. And that was often pointed out, that how can you invest with Kevin Drover considering Arcana's past and how they destroyed investor capital? The third objection was it's a small mine. And just looking at the feasibility study for the RV mine and some of the past challenges of the Shafter mine, that there's not enough meat on the bone to take a risk. And so let me address those. For point number one, I agree, Arcana was a failure story. In fact, I told management, please change your name. You're a different company now with this new project. You destroyed shareholders' value. The name is tainted. Choose a new name. Put the word silver in it. Colorado Silver or whatever. Just come up with a name, but there's too much baggage attached to the old name. Management wanted to keep the old name. They said it was good for getting meetings because people would recognize the name when they would do investor meetings in Europe and so forth. So they kept the name, but it was a different company in that they did a share rollback. This was a completely new project. It was a fresh start for new investors that would come in that didn't get burned in the previous iteration of Arcana. And the objection that Kevin Drover was at fault for the previous disaster of Arcana, I didn't agree with that. And I did research it, and I did go back to management, and I did ask about Kevin's involvement in the previous disaster of Arcana losing its mine and Shafter not coming into production. Shafter's the mine in Texas, and they tried to bring it into production, I believe, on a PEA, not a feasibility study, which is not smart. And the story that I accepted was that the previous CEO made a lot of promises, didn't run the company well, and basically put the company in a position to fail. And of course, the silver price was crashing during this time too, from 2013 on. And so if you're having problems at your mine and the product that you sell, silver, is going down and down and down in value, it's very difficult. But Kevin came in and he tried to cut cost and basically tried to stop the snowball. The snowball was already rolling down the hill. And once it gets some momentum, it's very hard to stop it. Maybe you could slow it down a little, but in the end, it's just going to plow you over. And that's what's happened. So Kevin didn't make all the decisions that led up to the failed first iteration of Arcana. And so I met with him. I found him to be a pleasant individual. And based on some of his past experience and what I understood to be his frugalness and his commitment to bring this mine into production, I was willing to give him a shot, which I did. The objection that it's a small mine, it's just, that was not true. And or that there's not a growth profile, I'll say three things to that. Number one, I did a video in the summer of 2020, a 40-minute video where I went there, a site tour, and I went underground and then on top of the mountains with Brian Briggs, who is the chief operating officer, or was at the time. And he showed the prospectivity. He showed the prospectivity of what they have in their claim block, in the claims that they were going to acquire, how they were the only mover and shaker in that region, how there were other past producing mines literally like next door. I've been there to that mine 3 times. I've seen them, that they could acquire and that they could ramp up production even beyond their 500 ton per day mill, which they had and had permitted. So there was the ability to potentially even bring 2 mills into production through close acquisitions right in that region. So there was the growth story that I could see. Also, when you understand a narrow vein mine, and if you're going to look just at a feasibility study and say, hey, there's not a lot of silver here, you have to understand that when you have a narrow vein mine, this is not a open pit bulk tonnage deposit. If you were to drill from the top of a mountain, I mean, how many hundreds of meters or thousands of meters would you have to go to reach the mineralization? And what are your chances of even hitting it? It's a narrow vein mine. I've been there. I've been underground there. I've touched the vein. You know, sometimes it was 12 inches. Other times it was 18 inches, maybe 24 inches or more at times. But I don't even know how you could vector in and hit that. And you just follow the vein as an underground miner. You follow the vein as it goes. So you constantly have 3 to 6 years of reserve ahead of you because you're drilling it out as you go. You follow the vein. So that's the reasonable explanation or counterpoint to those that say, oh, well, it was a small mine. Just look at what they have here in the feasibility study. And then often no potential value was given to Shafter. And again, that's a permanent mine with infrastructure and a mill already in place there in Texas, that if they got the RV mine up and running and they produced cash flow, they could then bring that mine into production. So those were the counterpoints that were reasonable to me based on the feedback and the objections that were given to me. And so why did I sell? I just told you I sold out for a 3-fold gain, 200% gain after being up basically a 9 or 10 bagger at one point at its peak valuation. And of course, nobody can sell their entire position at a peak valuation. You know, you have a huge winner that becomes an okay winner, and then you go back and you look at the chart and you say, oh man, if I only just sold here. Well, nobody knows when the exact top is. And even if you hit the exact top, a lot of times it's not liquid enough for you to sell your whole position in that time frame. So, you know, woulda, coulda, shoulda, that does nothing for you as an investor. It's doing, hopefully, what I'm doing now, thinking through and saying, this was my thesis. These were the objections from an intelligent and sometimes angry people. This was my response and my conclusion after engaging their objections. This is the decision I made. This is the money I made or lost. And here's what I'm going to take away in the future. And that's what I'm doing now, I believe, is what you should do with every single mining investment. And you should be fair. Like, people totally trashed Kevin Drover, and I didn't just go along with it without doing my own critical thinking, because, you know, the wisest man ever to live said we should treat other people the way we would want to be treated. And I would ask myself, okay, if I was the CEO, if I put myself in his shoes, how would I want people to critique me even if I fail? And so I am going to put some blame on Kevin, but I'm not going to put all the blame on Kevin, and I'm not going to overly demonize him and not learn from my own mistakes or what I could have done differently as an investor, because the only thing I can control is myself. So why did I sell? Well, if you are listening to this on YouTube or you follow my YouTube, I know there's thousands of you that listen in audio form only, but I did a site tour video the end of last year or fall, I think September, and that was when the mill was running, and they were building up to ramping up production and hoping to be in commercial production there in Colorado very soon. And so looking back now, hindsight is 2020, that video was like the peak of Arcana, where I was toured around again with Brian Briggs, the chief operating officer, who I consider my friend, and really enjoyed spending time with him and going to barbecues at his house, and just a great guy. Learned a lot from him about mining, underground mining. He taught me a lot of things in addition to setting forth the Arcana Silver investment thesis to me personally, and then of course through all who watched through the YouTube video that was watched by tens of thousands of people. And he's gone. Charlie, the mine manager who appeared in that video, he's gone. John, the mill manager who put the mill together, he's gone. Gary Lindsay from corporate communication, another one of my friends, he's gone. So basically everybody in that video, besides Kevin Drover, the CEO, doesn't even work for the company anymore. The mill is shut down. The mine shut down not long after that, and they ran into all sorts of problems. And this hopes of building up to 9 million ounces of annual production silver is now, we got 2 permanent mines. We thought we were close to getting into production in the mine in Colorado. We don't have enough money, and it's kind of like we just ran a marathon and we fainted about a quarter mile from the finish line. And so where it stands, using that analogy, is whoever can come in with 15 or 20 million bucks, whatever they need, and just pick up the lying, exhausted runner there and drag them quarter mile over the finish line, they get the bounty. They get the treasure. You know, I'm told that in terms of golf courses, it's always the third owner that makes the money. The first two, you know, one builds it, but doesn't get his return on investment. The other tries to make it happen, but it's the third guy that comes in after everything's there, or most everything is there. Maybe he does a few things differently and comes in with maybe some needed capital to improve this or that, and boom, they're the one that makes a killing, the third one. Well, that's the way I feel about the RV mine, is that the current shareholders of Arcana, there's debt secured against that mine. And how is Arcana going to pay it? They can't pay it. So, and they don't have the 15 to 20 million or whatever they need to finish the raise and do what they need to do. And now they don't have the employees around. You got to go back and hire the employees. But they were so close. And I know this from talking to people, that there were a lot of issues, talking to people that work there, there were a lot of issues. But at the same time, Bill, one guy told me, just with shaking his head, kind of like a little grief, he's like, we were so close to having this thing in production, so close to cash flow, but yet so far away, as the share price is 16 cents Canadian as I'm talking to you today, down from $1.25, 14 months ago, and down from 22 cents when I invested in like January of 2020. And so they're not going to be able to pay their debtors. If a group comes in and scoops this asset up, and if we do have a silver bull market, somebody else will make money, but I don't think it'll be the current Arcana shareholders. And mind you, on this position, I had shares and warrants, and those warrants were already worth a lot of money. When they were in the money, if I would have sold them at its peak, I could have bought a house with just the in the money portion of the warrants. But again, that's a woulda, coulda, shoulda. And I'm going to talk a little bit about what I'll do differently also here before I conclude. And so Kevin Drover, although he participated in the last 35-cent placement, he also was selling shares. And that was like a month and a half ago. And I didn't sell my shares. I held out till last week. So if the CEO is selling his shares and the whole story has fallen apart and they don't have means to pay their current debtor, somebody else is going to come in, and debtors always go before shareholders. If you're new to this, just know that when it comes, the equity holders are secondary to the debt holders. Also, at this point, Kevin has no credibility with the market. I mean, I'm just stating the obvious here. I told you I would be fair, but they raised via debt structure and like an offtake agreement, the CapEx that was stated in their feasibility study. And then they came on my show, and I remember on that episode, the share price was like $1.25, and I commended management and said, I featured this company at 25 cents. Now you're $1.25. Well done. I'm happy. Other people are happy with their investment. Thank you. And then I think it was the next day, then they announced a raise at $1, and then they ended up raising like $30 million, and then they ended up doing a full warrant. And that frustrated a lot of you, especially because Kevin made his counter argument for why that dollar share price made sense when the shares were at $1.25, and I think the warrant was at $1.25. I didn't go back and check every press release to do this monologue. I'm trying to be accurate. I'm probably 95% accurate in what I'm sharing, but many of you were frustrated, very frustrated, because you took whatever you had and you put it in this company, and then you see this mass load of full warrants. And it wouldn't be the last time they did full warrant with these continued financing when we all thought we were financed to production. And so with all of this money, management could have gotten it done. And I give them some leeway, or don't place full blame on them, in that, COVID was a real thing in terms of how it impacted their ability to build out the mine with the restrictions and the workers. And if one guy got COVID, everybody had to go home and they paid him. I give them that. I also give them the fact that infrastructure, the steel, the lumber, just anything you buy, it took forever in terms of the lead time now because of the supply chain disruption, and it costs multiples of what was stated in the feasibility study. So I can give them that. I can appreciate that it's hard to build a mill in the winter in the Colorado San Juan Mountains in the Rockies. I appreciate that. I can understand where the mill contractor is having a hard time finding qualified labor that will show up when the government in the U.S. is paying people to sit on their behinds on the couch and watch cable all day, okay? I can appreciate those things, and I could give them, you say, okay, I understand. But at the same time, when you're leading a public company and you're making public promises and you're asking people like me and others to write checks, which we did, then you need to come through. And if it doesn't come through, it's on you and you need to own it. And so it is management's fault that this failed. And that's part of where the market is not going to listen to what Kevin Drover says. And that's another reason why there's, in my view right now, there's no hope for where we stand at 16 cents, that there has to be new management, probably a new group that comes in, takes over that asset. These are just my thoughts, by the way. I'm not speaking, I haven't even talked to Kevin Drover since I did the site tour video last September that I can recall. Definitely not any time in the last four or 5 months. And so these are just my thoughts as an individual investor that I'm sharing with you. What would I do differently? Okay, we're getting to some key takeaways here. I took my initial position at 22 cents, as I said. And then when it went up over $1, and then it spiked to $1.25, and now I'm 5 times my money. I hadn't sold a share at this point, but hey, I've been around the block enough. This is my 7th year or so investing in these junior mining stocks. When something goes up that fast, it always has a pullback. And I said this is going to pull back to 90 cents. And so what I did was at that point, and then I remember I had hundreds of thousands of warrants also that were deeply in the money, worth hundreds of thousands of dollars. So I had massive exposure to the stock at that point too. And so I sold most of my shares above $1, even up like $1.20. And then after that, they announced this dollar raise. And so I said, okay, what am I going to do? And I decided to put half of it back into the dollar raise to get another full warrant. And just going back to the earlier point, I understand when you're a retail investor, it's frustrating because you're like, I'm holding on to my shares and these accredited investors and the company's allowing them to can sell their shares, buy the same share back and get a full warrant. It's not fair. I agree with you. You got to take that up with the SEC or the laws in Canada. And that's a debatable topic, but it isn't fair. But as a retail investor, you just got to be aware of that. And by the way, if you ever see a stock you own and it seems to be, it falls 10% on massive volume out of nowhere, but you don't know why, and then you notice a pattern, a week later there's a financing that's announced, it's because the people behind the scene, the brokers and so forth, they all know the financing coming. And it's really bad when there's a full warrant. It's bad when there's a half warrant because investors will sell and then go back into the stock to get the half warrant. But if you give them a full warrant, it's even worse. The selling and the volume, and you can look at the Arcana share chart, and over the last 2 years, you can see that same pattern repeated time and time again. And so I went back in with half of my gain there. I went back in at $1, got a full warrant. And then I think they financed again later at like 72 cents or something like that. And then I sold my shares again and went back in at 72 cents to get a full warrant. Mind you, I didn't want to see the press release saying we're doing another full warrant financing either. I was in at 22 cents. Once you're on the boat, you don't want the share structure to be blown out, especially as quick as they did blow it out. So that's something management did not do well. I understand they would say, well, we just have to give a full warrant. I disagree that there's other teams that don't give a full warrant. And so looking back, I would not have reinvested at that dollar share price, but I especially made the mistake of going back in at 72 cents and then finally selling out at 18 cents. And what I also learned here is that when I'm investing in a pre-production story or a near-term cash flow story, and I get in with a full warrant and I get a good deal, and management says, the next one, we're not going to do a full warrant. I can hope that they don't do a full warrant the next financing before this thing is cash flowing, but hope is not a strategy. The likelihood is that past behavior is the best indicator of future behavior. So if a team is going to issue a full warrant and they can blame it on market conditions and so forth, I need to say to myself, they're going to continue to issue full warrants with every subsequent raise unless they have a history of doing otherwise. And with Arcana, the history was the silver upside was sold, but in order to sell it effectively, we had to give the full warrant. And so that's something I'm going to really consider moving forward. Or if I do invest, because I get a full warrant, I'm going to assume, and when I do my projected fully diluted share table and how many shares there's going to be, I'm going to put that into my equation in advance. And the third thing is I need to develop a little better, and I want to, when I take a significant position in a company, especially like an underground mine, which is extremely difficult, way more difficult than open pit, I want to develop my legal feedback loops from people not necessarily in management at the company. And I recall back to Rick Rule, where he said when Brian Lenny from JuniorStockReview.com and I were interviewing him in one of our 45-minute, what I've called a mentorship session, he said that he developed some really good contacts with the drillers in Nevada by buying them beer, getting their contact information, and so some of his best intelligence came through those drillers. Well, Arcana had what they described as a rock movement event in one of their press releases, and where they had an issue in one of the almanac raises, which yours truly got pumped up, by the way. You know, I'm 6'5" and I'm in this little cage going straight up 200 feet in the dark, and an air compressor's pushing me up the rail. So that was quite the experience. I didn't tell my wife about it till afterwards because she wouldn't have liked to know what I was about to get into. But another takeaway is I appreciate how difficult mining is and how difficult a job these miners do and how dangerous it is. And they get, like, when you calculate their pay, these guys that were working there and their benefits, their health benefits, they were getting like $200,000 a year, which is that's good money, especially, you know, not everybody has to go to college, but you don't go to college, and by the time you're in your late 20s, you know, just learning a trade and you're making $200,000 a year. I understand the work's difficult, but that's good money, but it's difficult. I was in there right there behind the driller, just me and him for like 15 minutes, and I was just watching him do his thing and drilling and just saying to myself, wow, this is a difficult job. It's a messy job. It's a difficult job. So I appreciate, you know, what the miners do and the work that's done. You know, we just trade the stocks, but there's hard work that's done to make these things profitable. So we can see that on the cash flow statement and hope the stock goes up. But I want to develop, going back to my third point, I want to develop my grassroots feedback loop because, as an example, when the rock movement event occurred and they had to shut down one of the almanac raises, and this was going to cause huge problems and slow everything down and result in the eventual shutting down of the mine because they ran out of money. Well, the stock was shorted in like that week before that announcement. Well, why? because the miners are in town. I've been to Ouray, this little town, and you've seen it in the video if you watch my video. They're talking in the barbershops, they're talking in the restaurant, and they're just going to say what occurred. And so if you're an investor in the company and you live there in Ouray, it's a small town. You're going to hear that. And boom, you sell your shares. And then what do? You short the shares because you heard the underground miners. And there's not that many underground miners in America. So like they're a network. And so if you can get some intelligence into there, you can get some feedback of what's going on in these underground mines that, you've invested in. And so there were people, which really frustrated me, by the way, and that's something management should have done better. And I haven't even asked them for why it took so long to put out the press release, but why was there such a lag between this major event, which crashed the stock, and when you actually told the public what happened? Again, I didn't ask management that, but that was a great frustration on my point, because we're supposed to, as a publicly traded company, you're supposed to give the market any significant material information all at the same time as soon as possible so we can all make our decisions to buy or sell based upon it. But when a specific group gets this and gets it well before everybody else, they can sell their shares and then make money shorting the shares because they know that what news is on the way. So that was something that I don't think was done right. But I have no hard feelings, and I like Kevin Drover on a personal level. I like all of the management I met. I had a great time. I learned a lot through the process. If you lost money, if you bought at 50 cents and you're a bag holder, I feel your pain, and I understand it's frustration. And you may not agree with some of the points, and that's good. Just like I didn't agree with a lot of the critiques when people told me not to invest in Arcana. You may not agree with something I said. And good for you, but just be able to defend and articulate your position. And then if you're right, pat yourself on the back. But if you're wrong, critique yourself and see where you went wrong. This is kind of a different monologue. I haven't done one like this, but I wanted to do it because we covered the stock so closely for 2 years. I took tens of thousands of people on a site tour via video and the wonder of YouTube. So this is my feedback. Many of you have asked for it. I've been silent up until now. Just sold all my shares last week. I wish you the best in your investments. Whether you make money or you lose money, always be learning. Always take responsibility for your actions. I'll see you on the next episode. Bill Powers, signing off.